So inflation data came in better than expected. The market rallied to new all-time highs. I'm going to talk about some upside targets that we could potentially see and some downside targets if volatility remains going into next week. And I'm going to go over the stocks that I actually took new positions in for earnings next week, including a $49,000 position. So let's go ahead and jump into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, if we take a look at the account, we just hit new all-time highs in the account. If you do want to follow me along my journey to hit 8 figures, be sure to be subscribed by clicking the subscribe button down below if you aren't already. And also, if you get any value out of this video, please hit the thumbs up button for me. I would greatly appreciate that, and I appreciate you being here. So let's go ahead and jump into it. I'm gonna go to my realized gain loss for the month because I like to, give monthly updates every single Friday for transparency. As you can see right now, up 24,000 for the month. No losses for the month, which is pretty great. And obviously results vary month to month, but I'm not the only one doing it. As you can see here in my private mastermind, Options Trading University, we now have over 460 clients that are all sharing their inspiration. A new client here sharing his inspiration. Everyone sharing their trades, which is great to see. And if you do want access to my Ryan's Trades channel and my leaps, entries, and exits, that'll be at the top of the description below. Also, I do give away free trade ideas on my Instagram and my new X account, as well as my free newsletter. All three of those are down in the description and they're completely free. So make sure to be subscribed to all of those. And I appreciate you subscribing to my new X account. It's really popping off over there. And I try to do some new stock breakdowns on that as well. So let's go ahead and jump straight into it, okay? What happened with the consumer price index inflation measure? Well, came in at 3%, which was slightly below estimates of 3.1%. So that is why the market rallied today, because with inflation coming down a little bit, right? We're still in the 3%, not at that 2% target for the Fed that the Fed really wants. But overall, it's a lot lower than where we were at back in 2022 when inflation was as high as 9%, okay? So 3%, really good. And the market obviously really liked that. CME Fed Watch tool, which predicts the interest rate cuts. As you can see next week, 96% chance we're getting a quarter basis point cut. And in December, 98%. So those two haven't changed. We're still getting 2 more rate cuts this year and then multiple next year, which is very good for the markets because businesses can borrow at cheaper rates, consumers can borrow at cheaper rates, and that money ends up flowing into the stock market. So with that being said, we have a lot of economic news coming out next week. FOMC interest rate decision is on Wednesday. Obviously, the market is expecting a rate cut. If anything goes wrong there, we could expect some volatility, but 98% chance that's not going to happen, okay? As well as Friday, core PCE. I don't know if those numbers are going to come out because of the government shutdown, but they may. So next week could be very volatile, as well as earnings. All right, so this is kind of the earnings releases for next week. We have Celestica on Monday, big position in the portfolio. SoFi, big position in the portfolio. Meta, Alphabet, Amazon, Apple, Coinbase, and ExxonMobil and Chevron. Okay, so huge names reporting next week, which could be a make or break it for the market going into the Christmas season. Okay, it's either these companies perform very well and push the market higher, or they perform bad and the market could potentially take a haircut here, which I will get into. We're looking at QQQ, kind of broke out of this 613 area, touching the upper Bollinger Band at 617 today. So very good. My prediction was somewhere around 620. We're very close to that. And I think, with earnings coming in great, I think we could definitely break out to the 625 area on QQQ. So that's the expectation. I expect RSI to be probably in the overbought territory, which we are not there yet, but we are approaching. And if you look at the MACD right now, okay, we are seeing a bullish crossover that just happened today. So this is exactly the type of action we want to see going into earnings and the Fed interest rate decision, as well as the VIX. Okay, VIX we saw up at 29 this week, right? So with that being said, that was the perfect opportunity for everyone who is scared and for all the bears out there to go ahead and sell their stock, get out of the markets or short the market. And VIX fell off a cliff, okay? The fear and volatility index fell off a cliff. So with that being said, I am adjusting my cash management levels. Now let's take a look at the VIX levels. As you can see, we are now in between VIX 15 and 20. So there's still slight fear in the market, good options premiums if you're a options seller like me. So right now, essentially I could have 20 to 25% cash sitting on the sidelines just in case something goes wrong with earnings or something goes wrong with the Fed interest rate decision and the market tumbles. I'll be able to pick up on those opportunities, right? Because I have cash on the side. Now, for me, I am actually more aggressive than usual because I'm very bullish after this inflation data came in and we still have an interest rate cut next week. And a lot of the companies that are reporting, I believe, will have good earnings. I actually have 17% cash. So I'm not following these guidelines to the T. Still have cash, but I'm definitely more aggressive. And I'm going to show you the new position that I actually took going into earnings this week. Okay, so let's go ahead and talk about where I think VIX is going. I think probably, with good earnings, good interest rate cut decision being positive, we're going to cut up quarter basis point. I think we could see VIX back in the 14s, okay? Which at that point, I will be following my VIX cash allocations to the T. But for right now, I'm a little bit more aggressive. So we could definitely get into the 14s, maybe even the high 13s before seeing another pullback in the markets. On the downside, I do see, with any surprises, this lower Bollinger Band, 50-day moving average, and this trend line kind of all coincide with each other. So, we definitely could fall off a cliff if something bad happens in the market and hit this, 595 area. So I'm watching out for that on QQQ. But I think most likely we head up to the 625 area, which is kind of the expectation in the short term, okay? Long term, within the next year and a half, I think the market's going much higher from here, all right? But let's go ahead and jump into the first stock, which is CLS Celestica, okay? Celestica, one of my favorite positions in the market in my portfolio, up 4.91% today. They make all the, they manufacture hardware for AI data centers and many different types of companies, manufacturing equipment. And I really like that. They actually manufacture the switches that are in the AI data centers. And with all of these companies, building out data centers like crazy, such as Oracle borrowing tens of billions of dollars in debt to build new data centers, Celestica is a key beneficiary to that. Now, some recent news on them, CLS is expected to post earnings of $148 per share. So we'll look out for that. They're maintained at outperformed by RBC Capital. All right, and Goldman Sachs actually announced $340 per share for Celestica. Okay, so looking at the stock, this thing is just absolutely rallying. And it's one of the nicest charts in the game. This is the type of charts that you want to be trading the wheel strategy on because it's just trending upward. If you get a sign, cool, you get a discount, right? You get discounts like here at the lower Bollinger Band here, and then the stock just kind of rallies up. So what I did today was I actually changed my position on this stock. So let's go ahead and dive into the portfolio. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. But if we take a look at the account, okay, the position sizing actually increased going into earnings to 171,000. I have the same number of contracts that I had though. What I did was I actually closed out all of my contracts today for October 31st that were at the 220, 225, and 230 level, okay? And I moved the whole position up to 245 to get some extra premium, all right? So closed out today for, closed out at like 5K in premium. I had 1K left, but I went up to a higher strike for the same expiration to collect an extra $1,000, all right, for earnings in 7 days. So I'll show you exactly what I did. And, obviously on Monday, it'll be dependent what you want to do, but I'm going out to October 31st, 7 days, and I went to the 245 strike to pick up about, for me, I picked up, let's see here, $304, okay, which at the time was about a 1.3% ROI, potential ROI, depending on where the stock's at. Right now, the 247.5s are paying out about 1.25% in 7 days. Results vary there as well. But I really like that risk profile. And it's actually right outside the expected move because the expected move right now is $38. So technically, this stock can fall all the way down to around 260. So, being here in the 245s to 250s, you're probably, I'm probably not going to get assigned on these shares. But if I did, wonderful. I got a great discount, right? And we could go to the chart and I'll show you how much of a discount I would get if I got assigned. So from current prices, if it went all the way down to 245, I get a 17.5% discount on the stock. So I like that, and I got paid to dollar cost average. So Celestica, in my opinion, is going much higher. Even if the earnings come in softer, I think the lowest it could fall is probably somewhere in this 250 to 260 range. On the upside, I think it definitely could go to 320, just like Goldman Sachs said, 328, or did they say 348, 328? Somewhere around here. For this company. It's a great company, great PE ratio, 62 in the AI manufacturing space, and kind of a hidden gem, right? So that's Celestica. They report on Monday. SoFi is reporting on Tuesday, rated by many banks as a hold at this point. And, with rate cuts coming along the way, and the government talking about potentially selling off 1.6 trillion in student debt, SoFi is a key beneficiary of that. If they could obtain all those loans and start generating interest from those loans, that's huge for SoFi's business. So this company, I believe, is heading, by end of year, somewhere between 34 and 36, okay? If we go to the position, all right, we're gonna go here. Let's go to the position. As you can see, 186,000 in cash secured puts, my second largest position in the portfolio. I have the 26.5s, right, to collect about $8,288. Now, for earnings, the expected move is plus or minus $3.70. So this thing could go all the way down to, let's just say, 25.30. So I potentially could get assigned on bad earnings, which I'm totally fine picking up the shares at that price. But, the payouts are pretty decent here. The premiums are good. If we go to, for instance, the 26.5s like I did, right, 25 delta, that's paying out 2.73% ROI, potential ROI, in 7 days. Now, obviously, results vary based off where the stock's at, but to me, that's a good risk to reward profile. Okay, so I like that strike, 26.5, and if assigned, right, we can just say we'll just go from all-time highs. 26.5 would be about a 13% discount, so not bad, and pick up the stock down here and then ride it up to mid-30s, okay? So that's SoFi. I think the earnings are gonna be great as well, considering the interest rate cut environment. Now, the next two companies, okay, Meta. So Meta first, I think Meta is gonna do very well, especially going into interest rate cut environments. What you see typically towards the end of year, Christmas time, interest rate cuts, businesses start spending more in advertising, okay? Facebook or Meta rather, is a key beneficiary of that. And it's already been kind of beat up from all-time highs. So I think Meta can either head a little bit higher, probably in the 770 to 780 region on good earnings up here. And then if their spending is a little bit too high on AI, their AI department, I think potentially it could fall back down to 700 on the downside. But I don't think it's going to be too much further down if they do have lackluster earnings. But again, I think they're going to have positive earnings and the stock's going to go higher. Already have a bullish crossover on the MACD, a lot of momentum there. And they are kind of neutral on the RSI, so they aren't overbought by any means. If we go to the Meta position, I'm playing that one as well for earnings. I have the 730 puts to collect $2,600, and then I have 100 shares as well. But we can go to here. The 730 puts are still paying out $2,100, which is a 3% potential ROI. Okay, so very aggressive, 43 delta. If I had to do it over again, I probably wouldn't go that close. I'd probably go somewhere like a 30 delta. So I'd go, to the 707 and a halves, pick up $1,200, which is a potential 184% ROI. Results vary there, but the expected move is plus or minus $52. So this thing could go all the way down to like 680 and as high as 790, 780, somewhere around there. So, just, playing it as is. And I think Meta long-term is a great company. lots of growth potential. The next one is Google. Okay, this one I decided to add back in the portfolio. I got called away at Google at 190, so I kind of missed this whole run, which is fine. You can't catch them all, right? But I think playing Google earnings and having it back in the portfolio is great because I'm trying to go after companies with lower PE ratios, higher profit margins, and Google has a PE ratio of 27. Again, they're going to benefit from the the Christmas rally and Christmas time advertising. So I think Google has a lot of potential here. So what I did was I played earnings. I went out 7 days, sold the 245 puts, which is a $49,000 position. Okay. If we go here, 245, expected move is plus or minus 17. So the stock could essentially go down to 242 and I would catch it right at the bottom, which is totally fine with me. So if I sold the 245 puts, collected $300, which is a 1.25% potential ROI in 7 days. So I like that risk to return profile. Obviously results vary based off where the stock's at, but that one was a good earnings play. Did 2 contracts, kept it small, but still participating. Now the last stock is gonna be Amazon. This stock has been absolutely beat up. It's below the 50-day moving average. It's just been beat up over and over and over again. And I think this is actually the most undervalued stock in the stock market right now, because they are an AI company. They just announced that 75% of their warehouses will be replaced with robotics very shortly. Okay, and that's gonna be huge for their profit margins. So not good for the workers, but really good for shareholders and company profits. So I think that this stock has the potential to breach previous all-time highs of 240. I think after earnings, we could see a nice gap up into this range. So I have covered calls at the 235 area in case we do gap up that far to get called away. But if we go to the portfolio, you could see current position is very large. I'm gonna get assigned on these shares on Monday, okay, because we finished below my 225 strike, so I'll get 100 shares. So I'll have 600 shares, and then I have 5 covered calls at 235 ready to get my shares called away and have some nice appreciation and get paid a premium on top of it. So this is, also one of the largest positions in the portfolio, over 170,000 there. But I really like Amazon going into earnings, so another one to consider adding to the portfolio. If you enjoyed this update, please give it a thumbs up, and I'll see you in the next one. Take care.